Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage. He was identifying winning stocks with massive uptrends, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, Overstock.com before it shot up 1,000%. This power gauge comes from the legendary Mark Chaikin. Right now, you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where a stock is most likely to go next in any type of market. Simply go to chaikintrial.com for your free look. Again, that's chaikintrial.com.
Welcome to Making Money. I'm Matt McCall. Thanks for joining me here. It is March 8th. It is a Tuesday and more volatility. As you can imagine, the war continues to rage on. Unfortunately, in Ukraine, Russia's not stopping and Ukraine's not backing down. So we've had more sanctions, a lot of big news coming out today we're going to talk about. We're going to talk about the markets. We're going to talk about the worst day on Monday that we've seen since October of 2020. The Dow moves into correction territory for the first time in quite a while. All that and more, and believe it or not, nickel prices up over 110% overnight. We're going to talk about that, implications on EVs and everything else, commodities, batteries, you name it. A lot going on today. All this and more coming up right now on Making Money. Again, welcome. I'm Matt McCall. Thanks for joining me. It is the 8th of March, 2022. It is a Tuesday. And as I mentioned in the opening here, we do have a lot of uncertainty still surrounding this market. Last night, overnight, the futures were down big. Then we actually opened up a little bit higher, and now we're down about 45, 60 minutes into trading. We're down about 2/3% in the S&P 500. You know, a lot of this is being driven by high energy prices, obviously, which is being driven by the conflict in Ukraine, between Ukraine and Russia. Basically Russia versus the world. And we're seeing that really drive these commodity prices, which is now obviously flowing over into the cost of goods, which were already high with inflation heading into this month. And we'll talk about that a little bit later. Inflation number coming on Thursday. Inflation already at 7.5%. And we get the next number, as I just mentioned, coming out on Thursday. So prices are already high. You have oil spiking to a 14-year high. You have nickel hitting an all-time high. You have copper at an all-time high. You have wheat breaking out. We're going to talk about all this in one moment, but this adds to a bit of the angst that investors already had. We have higher prices we've been paying at the pump, higher prices we've been paying at the grocery store, and that's not going to slow anytime soon due to the conflict that we see in Russia and Ukraine, because they are major exporters of several agricultural commodities as well as energy commodities, and that does trickle down over to here. And it affects, unfortunately, certain demographics more than others. There's certain people, if they spend an extra $50 a month on gas, it's not going to change their life one iota. Other people, it might be that $50 that they save a month that is now gone, that are going paycheck to paycheck. And unfortunately, that's quite a few people in this country and even around the world. So there are direct implications on this, and you know, as far as investors are concerned, I think we're a bit nervous. We're a bit nervous as to what is next, because there's such uncertainty looming. I hesitate to even say this, but over I guess it was last night reading things, somebody put out, it's a firm I never heard of, but they said there's a 10% chance of a nuclear apocalypse, the end of the world. And you know, I'm going to laugh, because if the world ends, there's nothing we can do, right? It doesn't. I don't care how many stocks you have or don't have, or how much gold you own. It's irrelevant. The world's over. So to put that into your calculations as far as investing is absolutely asinine, because if it's not as if there's an apocalypse like that, you're going to live through it and come out the other side with your cash, the world's over. So who the hell cares at that point? And you always have to remember, folks, the world only ends one time. And if it ends, it ends. There's nothing we can do about it. You know, I don't mean to be just Pollyanna here, but you can't live life thinking the world's going to end with a nuclear apocalypse. I think the odds are 0.00001% that happens due to the conflict over there. I don't see it. There's too many smart people out there that don't want the world to end. to let one madman get his way. And I don't even think he wants it. I think he wants a lot of things. I don't think that's one of them. So, again, I hate to even mention that because it just gives chills down people's spines. But I wanted to put it out there just because that's the asinine type of headlines that we're seeing right now, scaring the bejesus out of people. So let's look at the market here and take a look. Right now, we're looking at the SPY, which is a Spiders ETF. As I mentioned, down about 0.6% here today. If we close here, this will be the lowest close that we've had going all the way back to June of last year. We're now down on the S&P about 13% or so, so easily in a correction territory. And when we pulled back about a week and a half ago, you see that was the low of the day when the conflict started, then rallied up. We were down about, I think, like 14, 15%, which is not far from the average pullback you have during a correction. So we're kind of in that zone right now. But again, we continue to break down because of the uncertainty that we're seeing at this point. Take a look at a Dow Jones Industrial Average. I don't look at this that often. It's 30 big cap stocks, and you can see here in the Dow, it's down about 0.2% right now. And it's again, this one could be closing at the lowest level going all the way back to April. So this is nearly a one-year low. And when you take a look at what the Dow's doing here, it's in its first correction, and really because a lot of people don't consider a correction if it doesn't close, even though intraday, I believe, is a correction. But it closed at a correction level, now down about 11% or so from the highs. And then finally, let's take a look at the NASDAQ composite. And heading in today, down about 20%, down about 0.5% right here. Again, this would be the lowest close going back to March. This would actually be a one-year low here, because the lowest close will be back here early March. So it'll be a one-year closing low if we do break down and close down here today. So not really great news, honestly, coming out of everything I just said there. But, honestly, at the end of the day, we know what's going on. And we'd had the worst day yesterday since October 2020. We're feeling it. It's the innovation stocks, the ARK ETF, ARKK, hitting a new 52-week low. So you've seen a lot of things break down, and it's okay. Like that happens. And I'm not saying we can't keep going lower here, but we are getting to the point where there's some great opportunities out there. And again, I got some questions from Twitter I'm going to cover a little bit, but I'm going to talk about that because I think it's important to talk about buying in the lows, trying to pick bottoms, looking for sweet spots, waiting for an uptrend to begin. I'll talk about that in a minute. But what I want to talk about first is commodities. And oil, hit it's about $124 a barrel right now. It's above 130 in the last 48 hours. We could take a look at USO, which tracks the oil price, and I mean, just look at the huge run up it had. Early December it was around $46. Now it's at 87 and change, at the highest level we've seen in a long time. Huge volume coming in, and obviously that's a direct effect of what's going on in Russia and Ukraine. And as I mentioned, we always tape this a little bit earlier, so we're about a little over an hour into the trading session, about 10:35. Biden's supposed to speak at 10:45, which means he'll probably show up around 11:45 because he tends to be very late, as most presidents do. But the expectation is that he's going to ban imports of oil and gas from Russia. And obviously, that's going to have a great effect on what's going on here in the markets. And if that happens today, and by the time this plays, it may have already happened, but that's going to be quite interesting to see how that trickle-down effect. And will the other European and NATO countries join in? Because Germany, for example, the largest economy in Europe, gets nearly 50% of its gas from Russia. You shut that down, Germany's in trouble. I mean, that's the ripple effects we're seeing here. And I think Putin knows that, or I should assume Putin knows that he has some bit of control. Outside of that, who the hell gives a shit about Russia? Nobody cares about Russia. I mean, honestly, they don't have much going on. Yeah, they have nukes, but outside of that, it's not like we're relying on them that much. But it comes to energy and wheat, especially for the Eastern European and Western European countries, that's extremely important. And that's why we're not involved, but we're doing sanctions to try to keep things as good as possible, which they don't look good right now. So that's oil. Let's take a look at wheat. I've talked about this in the past, and this is a ETF that tracks the price of wheat. It's a fund. WEAT is a symbol. You can see it's run up from 750 about a month ago, hit 1250. Now we're at 1150. So wheat, big exporter, number one exporter of wheat is Russia. Number three exporter of wheat globally is Ukraine. And I can't imagine a lot of wheat being exported right now out of Ukraine, and as they're bombing the hell out of the country. So that's another commodity that's going to lead to higher prices, especially in some of the countries in Africa, in Eastern Europe, that will really have a direct effect on people who don't have a lot of money that need to live off this wheat and bread and other things. It's really important. A lot of people believe that the rising wheat prices just before the Arab Spring was what led to it, because prices were so high for bread, which is Egypt, for example. The amount of bread that's eaten is insane. So this hopefully doesn't lead to something like that again. Then we have copper, which is hitting an all-time high this week. COPX, that's a copper miners ETF. You can see it's down a little bit today. That hasn't broken out to a new all-time high. If you zoom out here, it's not far from it, but the miners haven't been doing as well. And this is JJC. This tracks the price of copper. You can see that did break out. This is a longer-term chart, but you can see it did break out here. That was on Friday, pulling back since then, but we did hit an all-time high in copper as well. And then let's talk about nickel. What a crazy, crazy market we've seen in the last 48 hours in nickel. On Monday, nickel futures were up 66%. Russia produces about 70% of the world's top-grade nickel. So obviously, there's a direct correlation to that. According to reports, it was up as much as 111% in Asian markets overnight. So the London Metal Exchange, the LME, decided to halt it today. No trading at all for Tuesday. It hit a new high above $100,000 per metric ton. And it might have been Goldman, one of the big firms, came out and said that this could increase the cost of EVs, electric vehicles, by $1,000 per vehicle. And the reason for that is nickel is a very important component of the batteries of electric vehicles. And what's the most expensive, the biggest part of the electric vehicle? The battery, of course. So as those prices go up, boy, oh boy, that could have a direct effect on that. So let's take a look here at JJN. So this is another one of the iPath funds that track commodities. You can see it started the year around $27. It was well above 70 yesterday, but now we're down 16.5% today. I mean, craziness. I mean, look at that huge gap up. Nothing here is a buy or sell recommendation, as nothing ever is in making money. But again, I'm just showing you there are ways to play this. I'm not saying you should play it, because this is absolutely bananas, but just showing you that there are ways to track some of this. And then there's gold, of course, which, I've been wrong in the short term. It's been rallying. It's up at 3% today, above $2,000 about an ounce. So it continues to move higher. It's actually been a bit of a safe haven, believe it or not. And then we have Bitcoin, which is around 39,000 right now. So that's actually held up pretty well also. But when I look at all these moves, I just showed you JJN and a couple of these other commodity ETFs that are breaking out. And then I look at some of these small cap energy stocks, and I can't help but think that it's a bubble. I mean, people bash Bitcoin all the time for being a bubble, electric vehicle stocks being a bubble. Let me take a look at a couple of these small energy stocks, and you tell me if this looks like bubble territory to you. Indonesian Energy Corp didn't trade much at all. It was around $4 a share in February. It was up at nearly $90 yesterday, $86.99. Look at this chart. That's like a 20xer in a month. I mean, come on, look at that. Let's take a look at USEG, US Energy Corp. Was at $3 in January. It was above almost 14 today. Up another 66% here today. What else do we have here? Let's take a look at HUSA, which is Houston American Energy Corp. I mean, this was below $2 on Friday, and now it hit this morning, hit 16 and change. An 8-bagger in literally 3 trading days. MARPS, MARPS, which is the Marine Petroleum Trust. Folks, $5 to 32 today. Come on, that's literally in a couple days. And then the last one here, which has been a hot one too, is NINE Energy Services, from $1 to $8 today, up another 68% right now. It was up over 100% at one point. If this doesn't look like bubble to you, I don't know what is. Could energy prices continue to go higher in the near term? Sure. But I will tell you that this is scary as hell. I believe that we are very close to a top, if not at a top, in the energy stocks. Here's XLE. This is the large ETF that tracks the big names, ExxonMobil, Chevron, etc. You see it's breaking out. It's been up about 7 consecutive days. Still not near an all-time high, but a huge resistance at $80 going back to a couple of years. it's run so much. I mean, it was below 40 just about a year ago, so it's nearly a double in the last 12 months. And these are big name stocks. These aren't little stocks. These are big stocks. Again, could this continue in the near term? Yeah, I don't like to ever fight a trend. I would never short a top. I would never short this anyway. But I never try to catch a top and short it. But again, what I see here, though, is something that's very frothy. I mean, how much higher can oil possibly go? And I debate this in my head often. I had the debate this weekend. I can't remember who I was with, but I had a debate with somebody this weekend. And you talk about energy stocks, or oil, I should say. And there's a case that the demand for oil is going to continue to drop as more electric vehicles come online, more clean energy, whether it be solar or wind, hydro, etc. So there'd be less demand for energy, fossil fuels, oil and gas, right? Makes sense. But in the near term, we can't just take all the cars off the road and convert them to EVs or replace them with EVs right away. It's going to take time. So in the near term, we're going to still see spikes and sell-offs in oil and gas for the next probably 8 years, the rest of the roaring 2020s, in my opinion, until you get to a point where EV penetration is around 50%, where clean energy penetration is closer to 70%, and we're taking our dependency off fossil fuels. And that will happen. But in the meantime, there's going to be shortages and there's going to be oversupply. And the reason for that is, again, I don't like any politician. I should say any. I despise 95% of politicians. And it just irritates me when you hear some things when you know it's not true. When they're talking in the White House talking about, well, it's the energy companies pushing the prices up. It's not the energy companies, folks. You've been pushing energy companies to stop drilling in this country. And now all of a sudden when prices go up, you want them to drill right again. You can't turn the spigots on and off like that. That's not how it works. You think you just have human capital standing there, okay, go work. Nope, you laid off, go work. It just doesn't work that way. So they've been pushing the energy companies to not drill as much. Now they say, why aren't you drilling enough? It's complete BS. It's just they're spinning it so they don't. The politicians don't look like they're doing something, and then they place the blame on somebody else, which is what politicians do. So you can't do that. So there will be times where there is undersupply, which we have right now. Then it's going to be oversupply because they're going to force them to put the spigots back on, and it's going to go back and forth, and that's what makes a commodities market. That's why you have spikes and sell-offs. I think we're closer to the end of this current spike. I'm not going to call it a bubble. This current spike, if you will. So I'd be very careful if I was looking to get into oil and gas companies right here. That's all I'm saying. Just be very careful at this point. I want to talk one more thing here about the markets. Is a yield on a 10-year. This is the 10-year Treasury. We're at about 1.85% today, so it's up quite a bit. And keep in mind, this was moving higher for a while, as we anticipated more interest rate hikes coming from the Federal Reserve, and then pull back on the Ukraine-Russia situation. And that's because as people buy bonds, which they perceive as safety, the bond prices go up and yields drop. That's why we've seen that. But we're seeing yields spike back up a little bit here today, but really not much as long as it stays in kind of that area. And then Thursday, just keep in mind, it's going to be a pretty big day for interest rates. It's going to be a big day for the markets. We have the ECB, European Central Bank, coming out. I'd like to see their views, especially being proximity to what it is to Ukraine and Russia. And then we also had the CPI, the Consumer Price Index, which measures inflation for the consumer. We were heading into this reading at 7.5% from last month, which was near a 40-year high. It's expected to move up to about 8%, could be even higher with energy prices moving up. So we'll see how the market reacts. It's going to be pretty crazy, I think, Thursday, based off those two events that we're going to see. So, what I also did here was before I jumped on air, I went on Twitter and I said, hey, what are some things you want me to touch on? And I just want to go through a couple of these comments, and they all kind of go together. And it's a lot of things, nervousness. One person says, where to put money to avoid a dollar crash and war consequences with a bear market. Well, again, bear markets, we have one in the NASDAQ. I don't know if we get to one in the S&P. We just hit a correction yesterday in the Dow Jones Industrial Average. It's usually once you're at bear market territory, which you have in the NASDAQ, it's not the best time to really be moving your investments around. Because in the day and age we live in now, the more recent bear markets, we snap back from pretty quick. And I see that happening here. So I wouldn't make any drastic changes. If you can't sleep at night, I always say then raise some cash. Don't do anything but raise some cash if you can't sleep at night. When is a rebound in high growth? I don't know. I don't have a crystal ball, but I will tell you this again. I don't try to pick bottoms. I try to look at companies that I believe will be much bigger 5-10 years from now. that have good stories, good management, are in one of my mega trends. And when they pull back 30%, that's usually a great buy. Could they pull back 50? Yes. Could they pull back 70? Yes. But I'm investing for years out that I believe that there's a lot of great opportunities at current prices right now. Again, short term will be driven by headlines and by geopolitical concerns that we're having right now overseas, and that's going to move the markets from day to day, week to week, month to month. I can't invest based off that because you never know what's going to happen there. I based off of corporate profits and where I think the world's going to be in 5 to 10 years, which trends will be leading, and I look for the best companies in those trends. Do you think the U.S. stock market's heading towards recession? I don't, but if these energy prices and food prices keep rising, it could potentially cause a recession. I just don't see it happening because the unemployment situation is very good right now, and there's a lot of people that just don't want to work for whatever reasons. There's the great resignation, as they call it. So I think we'll be okay, stay out of a recession. But if we were to move in a recession, I think a lot of it's priced in. So again, it's usually too late at that point once they tell you it's a recession. Somebody says, you've been saying a great opportunity since we went down another 10+%. When is the time to exercise patience and just wait for an uptrend? There's two ways to look at it. You can wait for the market to bottom out and start working its way back up. Sure. That's one way, but I don't deploy all my cash when I've been buying. I bought another stock or two last week. I do a little by little and deploy it. It's like time value. Over time, I'm going to invest in the market, and as the market starts going back up, I'll be buying on the way back up too. So there's a few ways to do it. I mean, everybody has to have their own strategy, but yeah, there's definitely a few ways that we can go about doing that. So that's just some stuff there from Twitter I wanted to cover. And let's just go back to the markets real quick and take a look at the S&P 500. It's down about 0.5% right now. So again, I don't see, it's tough. This is one of the tougher markets because we are dealing with a situation that's really out of our hands where, it's very similar to the pandemic, which, crazy enough, does COVID even exist anymore? I don't know. Nobody talks about COVID anymore because we're talking about this because that shows you the media, folks, that COVID just happened to not be important the moment the war started. You think that's a coincidence? No, it's because the media needs something else to talk about. So this is more important, and that's why. It's just it's quite fascinating how the world works and the media works. And I know because I was on the inside. I've seen how it works. So yeah, I mean, the market's here again, down about 0.5%. We're a bit oversold in the short term. Let's take a look at the VIX before we wrap it up here. And this is the volatility index. If it closes up here, it's the highest close we've seen since going back over a year. We are at levels now, I'll zoom out and show you, that are typically high. This is the spike that we had, the pandemic. This was 08-09 financial crash. Other than that, we're getting close to levels that we only see a few times over the last 15 years. So it shows really the panic that we have right here. So keep that in mind, and we'll stop the show there. Just kind of showing you exactly the panic that we have, and when panic is high like this, folks, typically we get to a point where it's a great buying opportunity. Thank you so much for watching. That was Making Money, and I'm Matt McCall.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.